Hey everyone, welcome back to another video on the channel. The portfolio is currently sitting at $7,403.60, down about $139, including after hours for the day. For the week, we are down 162.51 or 2.15%. For the month, we are down 236.64 or 3.1%. For the 3 month, we are down 544.01 or 6.84%. In the year-to-date, aka the all-time, we are down 382.23 or 4.91% on the portfolio, guys. So let's get straight into this update here. We've got a lot to talk about this week, so let's get straight into it. So starting off here, I'm just going to go down the line on these. Starting off, our key option expired this week, worthless. At one point, if you guys saw my post, key rocketed up after earnings. We'll go to that real quick. You can see key went all the way up to, let's see, about 1109. During this week on earnings, and actually I'm not even sure if it shows it, but it spiked really high at one point into the 11s, and my strike was 11, so we would have been called away or had to roll. But as you can see, key has fallen off pretty strongly since then, all the way down into the 9s, which we haven't seen in quite a long time. The last time we saw 9s was back in the 3-month chart. In fact, even further, all the way back here when I initially bought it. So it looks like we're going pretty far back down. At one point it was at 1257, which I remember that. That was great. But yeah, still holding on to this, still up overall on that. And yeah, moving down, we have these put credit spreads. I'm looking to close at, let's see here, looking to close at 5 a piece, which would be about 50% profit. So these are just our pending orders here, and yeah, we're opening this 1050 call for 2 weeks out come Monday. Moving on down, we have a Labu call we sold on Friday because I rolled out my position because it expired worthless. Same with MPW, rolled it out to next week at the $5 strike. With T is actually performing really well right now, and so this call is in the money currently. It had really good earnings this week. You can check it out here. Yeah, you can see it was at 1432 and it rocketed all the way up to 1567 at its max. If you guys remember, I originally got assigned at 16, so we're actually getting quite close to that assignment point. But this call is in fact in the money. I rolled it out to this Friday. It was originally set for last Friday, but all the extrinsic value had gone away, so I rolled it out to the following week for a net credit. But it is still in the money, so I'm hoping it can maybe come down a little bit, which it's starting to do. Maybe come down a little bit so we can roll to a higher strike, or I'll continue to roll out at the 15 strike to keep collecting weekly premium. So yeah, T is looking really good. You can see I'm only down $60 now overall on T. Excluding this short call though, obviously we got to find a way to roll this for a credit above that $16 strike. That way we can qualify for all of that. Also, we have a dividend coming in on November 1st for about $28, which is always great. That'll lower our cost basis quite significantly. This isn't my adjusted cost basis. My adjusted cost basis is somewhere in the low 15s, so we probably are overall profitable on AT&T now. But yeah, so that's good news. Great earnings for AT&T. Moving on, we have the SoFi put credit spreads that I opened up, I believe last week. So these are down 28 overall. I have 2 of them. They are currently worth 25 a piece. SoFi is in between my strikes currently. So if you guys remember, the plan with these is that if my options are in the money by expiration, I'm going to take profit on the long put, and then I'm going to roll out my short puts like regular cash secured puts. Because yes, I am down 28, but if we go to my long puts that are my insurance or protection, you can see I'm up $72 or 150%. So we can close this out for a profit, and then our short puts, we only need to roll out for this much credit to recoup any of our losses. Because you will see that these are down 100, but because of that short or those long puts that I bought, they basically give me some insurance and reduce this loss. So that's the idea here, guys. Whether SoFi finishes below 7, where we can take profit on this and then just have to roll this, or if it finishes above 750, where we make the full initial profit, it doesn't matter. I mean, this has like 40 more days until expiration, so nothing really to do here but wait. So yeah, moving on. ET $13 put. Opened this guy this week following the rules-based trading system. It's currently up about 12% or $2. I think this is a pretty good play. It's at the $13 strike, and you can see Energy Transfer is still on a really crazy run this year. I do, of course, wish I bought it. If you guys are a long-time viewer, I was wheeling Energy Transfer back in December of 2022. I'm not sure if we can pull that up. It was around here, yeah. I was selling put options on it during this period of time, but I never got assigned. And as you can see, it's had this crazy run up. And I was also selling puts, I want to say somewhere around here as well. And I was thinking of buying 100 shares. I remember making a video on that recently around August. I was saying I might buy 100 shares of Energy Transfer. I want to say around here, which would have been a great purchase, but obviously, can't go back in time. But yeah, so this short put's doing very well. Very far out of the money, has an 18 delta, so I'm sure we'll hit full profit, but it's got like 40 days till expiration, so it'll be a while. But that's another good play in the portfolio. Moving on down, we got the Ford 1050 put, which I also opened this week. It is currently down $7. Open for an average credit of 16. It's currently at 23. This also has a very low delta of 21, so very high chance that we make the full profit on this. This is a very low, far out of the money strike. You can see we're at 1163 on Ford, and this is at the 1050 strike, which hasn't been hit so far this year. So I'm willing to say that we're pretty safe on this. You can see it's never gone into the 10 range this whole year in terms of closing price. And if we go back to a year, we get into 1095, but we never get close to 1050. So my idea here is if we're going to get assigned on this, we might as well get assigned at pretty much a 52 or definitely a 52-week low on Ford, because you can see Ford has some great run-ups to the 15 range pretty consistently. It's a very interesting stock because of the way it trades. You can see it was forming this very nice sort of triangle pattern for the longest time. But yeah, that's the idea behind this trade, and it's going poorly at the start, but once again, we have about 40 days till expiration and very low delta. That theta is going to start kicking in soon, so I have no problems with this trade. We're just going to keep it on here. Moving on though, a key $9 put. Because of Key's recent falling, it's down a little bit. We got $13 down. At one point, this position was about 25% profitable. In fact, even more, because I originally opened for a $20 credit. This dipped down to 13 during the earnings report day, and then obviously when Key started falling, it's gone back up. But once again, it's fine. It's at the $9 strike. We're willing to have that strike. We like that strike. 26 delta, a little bit more likely on this one, but still, 74% chance we make the full profit, so not a problem there. Once again, 40 days out, so theta will start kicking in soon. And yeah, another good trade, I'd say. We're just going to wait to see how that plays out. Moving on down, we have the SoFi call debit spreads. These things are very volatile. These were at one point at 55 each, which put me in about $15 of profit, which was pretty crazy. And then obviously, we've seen this run up to the 90s before. This was insane. I remember this. These spreads essentially doubled at one point. But yeah, now we're back down to 40. It really does just fluctuate like crazy. You can see we've dipped into 37 one week, and then it was at 57 one week, and now it's at 38 this week. So all over the place on these. We currently own 2 at an average cost of 48. Probably going to pick up more if we get into that 30s range again. We saw it go down to 37. If we could maybe get down to 35 or 30, I would consider buying another one and lowering our cost basis again, because once again, I like SoFi for the long term, and these expire in 2025. And we do have SoFi earnings coming up very soon, and the last time we had earnings on SoFi, these popped up to 95. Not saying it's going to happen again, but SoFi has a very weird sort of sentiment leading into earnings, I've found typically. So we'll see what happens there. But yeah, that's the plan on these guys. Still like these, even though we're down a little bit. So yeah, that's looking good. Moving on down, SPLG. Also, this is on total return, just so you guys know. SPLG, our S&P 500 holdings, currently at around 83 shares. So we're still building here, guys. Still building with an average cost of 50.56. What's crazy is just the market has just collapsed this past week. We were looking like it's pretty unbelievable. If we go to the all-time here, in this past week we were only down $70 overall at one point, and we have just barreled all the way down. And basically over the course of 2 days, we've basically given all of that back, which is pretty actually kind of impressive. But yeah, going back to SPY here, I mean, it was at 51.41 at one point this week, and now we're all the way down to 49.53, which is pretty crazy. But yeah, still buying every single day. You can see we've been buying since about the end of August. So around here, we've been buying every single day, which is pretty much a perfectly timed way to dollar cost average, because you can see it's pretty much done nothing but go down, which means we're getting a very good cost basis. So we started buying at $53, and our cost basis is 50.56, which just goes to show the power of dollar cost averaging, to be honest with you. You can see we're down 2% on this position overall. And yeah, still buying every single day. trying to think of anything else I can say about this, because it's really, it's the same thing every video. But once we get to 100 shares, we can start selling calls. This does trade on monthlies, but the point of this isn't to collect a consistent premium. It's just to hedge downside and to maybe collect a small premium here and there, like this $10 that I could collect for selling at pretty much the 52-week high. That would be the kind of trade I would put on, would be something like that, where my holding would have to rally an insane amount for that strike to get hit. Things like that are the kind of the way I'm thinking about doing this. I'm not doing this at all because for just the premium, because I don't want these shares to get called away, but that's the idea. Once we get our share count up there, still buying about 1 share a day, so we'll be there in about 2 weeks, which is exciting. But yeah, moving on. AT&T, once again, very close to breaking even on AT&T if you exclude options premium and dividends. If you include those, we're definitely up on this, so that's good. So AT&T is looking good, only down $60 at this point. Key is still up. At one point we were up about $250 on this, so yes, it's come back down quite a bit, but we're still up, so I'll always take that, up $60. MPW and Labu still every single day hurting me. It feels like this stock never has a green day. It's kind of, oh well, there you go. But it's really quite crazy. I mean, every single day has pretty much been a down day on this stock since I bought it, which is pretty insane. I bought it like up here, and it's been just down, 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 down. So pretty terrible investment here. I'm not gonna lie, we're down 44%. So the current plan with this guy is to just keep selling calls every single week. They do have earnings this week, so maybe we could see some kind of action happen here, but I honestly doubt it. If anything, we could just get beaten down further. So we'll see what happens there. I'm gonna hold through it. I'm actually gonna roll this call up a little bit in case we do have some kind of pop. Maybe even just close it out. But yeah, the idea here is just keep collecting the dividend and keep selling calls to keep lowering that basis. And then eventually just get out when it maybe has a little bit of a pop, or just get it called away as soon as possible, because I do need to free up this cash to buy SPLG. But yeah, overall, not a great investment, as you can see, but still at the end of the day, I made it, so got to own it. So like I said, just going to keep collecting premiums to lower that cost basis, and I guess we'll see where this one goes. But yeah, moving on, we got Labu, which is another one that I've always said you never want to hold this. So, I should have probably listened to my own advice. We got assigned around here. Once again, nothing but a downward trend pretty much every day I've owned this. But yeah, average cost basis of 550. We're currently at 284, which is pretty crazy. This is a 30 times biotech shares ETF, which is, you can probably see where I'm going with this. You get kind of premium trapped into something like this, where you see the amazing premiums and you're kind of just tunnel visioned on that. Same thing with MPW. I saw the great dividend and I was like, wow, this has to be a good company. So similar situation here, where I just see high premiums and I'm like, wow, I really want to invest in this. And you can see that has come to bite me. We are down about 50% on this, and I don't have any reason to believe we're going to, I mean, who knows? We've seen it go from 4 to 7, or if we go even further back, we've seen it go from $16 to $162. So, there's always that chance that this could bounce all the way back up, but it's not something I'm interested in being invested in anymore. And if you actually go back to the day I got assigned on this, in the video I made, I pretty much said in the video, this is not something you ever want to hold. I want to get out of this as quickly as possible. And I kept trying to sell at the money calls and I never got called away. And so here we are today, kind of holding the bag here. Still selling calls though. Surprisingly, you can actually still get some good premiums on this thing. I'm making about 3% a week in terms of premium, which is kind of crazy. And the thing about this is we've collected so much premium on this stock alone that our actual cost basis is probably in the high threes. So shockingly, we're actually not down that much on this stock, simply because of how crazy the premiums are. So it is possible we could wheel our way out of this, and that's kind of my plan. I'm just going to wheel my way out of this as much as possible. So keep selling these calls until either we get assigned on the call, because I'm not too interested in rolling my calls if I do get assigned, or we eventually somehow make our way out of this, which I could see as being possible, considering we're collecting this much every single week on a $3 stock, pretty consistently too. I will actually pull up my spreadsheet real quick. Just give me a second. Let's see here. It's not updated to the latest trades, so some of the stuff you're going to see at the top is not updated. I did change it up a little bit. So we got like an SPLG page now, short put log, and here's the cost basis sheet I made. Go to Labu. You can see we collected $110 in premiums, which I believe it's a little bit more than that because I haven't updated the spreadsheet in a little while. So yeah, so we're actually not down as crazy as it looks on Robinhood. Same situation on MPW. We've collected around 107, excluding the most recent calls that I sold because I haven't, like I said, haven't updated this spreadsheet in about a week. So with all things considered, we're actually only down around 30% on these as opposed to the 40 and 50% that Robinhood is showing. So not as bad as you might think. Same thing with T, only down 2%, and then Key, we're up 7%. So overall, it's really not that terrible. It just looks bad in Robinhood, and then you can see we've collected around $250 from other tickers in terms of premiums and dividends. So all in all, really things are not that bad. We're just going to keep collecting the premiums, keep buying SPY. You guys know the drill. Same as always. And yeah, I know, eventually it might look ugly now, guys, with this, this all-time chart looks pretty ugly. But for the most part, we are tracking the S&P, because if we go back 3 months, you can see it's down 7%. So, around when I started investing, pretty much, it's been down. So, it is what it is. I don't think we're definitely not beating SPY currently, but we're at least tracking it for the most part. And obviously, once we get all of our holdings into SPLG, we'll be tracking SPY 1-to-1, but we're also going to be selling options, so we'll hopefully be able to beat the market just a little bit. That's the ultimate goal, guys. Eventually exit all of these stock positions, be all in the S&P 500, and then just sell calls against that, and also sell puts on the side using margin, because margin cash secured puts do not charge interest. So that is the ultimate goal here. And then one last thing, Aptly, still holding Aptly, collected a lot of dividends on Aptly, which is good. So this loss is actually not nearly as bad as it seems. It's probably around $15 of loss because of the amount of dividends I collected. I also closed out my Google Yield Max position at a profit ultimately, and for a capital loss, but we've collected a ton of dividends on this. So it ultimately comes out to be a nice profit on that. So we were able to close that out for around $200 in equity that we could put back into the portfolio that I could then put back into my other holdings like SPLG. But yeah, guys, so that is the plan. Still selling calls, still selling puts, still collecting dividends, still buying SPLG. And that is literally just going to be all I do in this portfolio going forward. I'm going to keep making these weekly updates, showing you guys where I'm at. Like I said, it looks ugly now, but I know in 5 years' time, selling all these puts, selling all these calls, buying S&P 500 every single day for 5 years straight. I know I'm going to look back on this moment and I'm going to be like, wow, I've really come a long way. I'm glad I was doing this, even though it might have looked bad and I might have, felt like, oh, I might want to quit this because, I'm down 4% and it's not looking good. I know eventually I'm going to look back and I'm going to say, wow, I'm glad I did this. And that, we're ultimately going to be looking at a green chart here. So one day, I'm going to keep grinding, keep doing the same thing, and we'll see where we come out. So yeah, guys, thank you for watching this portfolio update video, and I hope to see you in the next one. Please subscribe, leave a comment down below of your thoughts, drop a like, whatever you guys want to do. I love interacting with you guys in the comments, building a nice little option selling community. So yeah, guys, thank you for watching, and I'll see you in next week's portfolio update video. Goodbye.